It's a good time to be an oil company, and an even better time to be an oil investor. Over the past couple of weeks, big oil companies have reported a surge in profits for the first 3 months of the year. In fact, earnings would have been even bigger had they not booked charges from exiting Russia. But that boom is bound to raise scrutiny from Democrats who believe big oil's profits are coming at the expense of American consumers saddled with high prices at the gas pump. Here are 3 things to know about the earnings in the oil sector. Unsurprisingly, it all comes down to surging crude oil prices. Brent crude futures, the benchmark globally, have surged more than 40% this year, going above $130 a barrel following Russia's invasion of Ukraine. And while prices have come down since, Brent is still trading above $100 a barrel. That's bolstering the bottom lines for oil companies. ExxonMobil, the country's largest oil company, reported its net profit more than doubled to $5.5 billion from a year earlier. That was even after booking a $3.4 billion charge from exiting its operations in Russia. Meanwhile, Chevron reported its highest quarterly profit in nearly a decade, while Shell posted its highest earnings ever. The surge in profits comes despite the writedowns tied to Russia, and they speak to how good the quarter was for big oil, according to analysts. The bottom line is that the industry is generating the highest free cash flow certainly in the 25 years that I've looked at this business, says Doug Leggate. It wasn't always this good, however. Oil companies suffered earlier in the pandemic, when crude even turned negative, meaning traders were actually paying buyers to get the oil off their hands. Exxon, for example, suffered a historic net loss in 2020, its worst performance in decades. The record earnings in the first months of this year are leading to big dividends and share buybacks for investors.